Hi, Chris Duff over at Serious Land Capital, vacant land funding partner. I know we promised for another market update today after yesterday's episode to trying to bullet point this. And I know I alluded yesterday as well that, obviously I'd been writing in our, new Serious News newsletter about, definitely the warning signs we see within the macro economy and how we're trying to dispo our existing portfolio ASAP to recapitalize and reset our underwriting criteria in expectation that, volatility is going to be the norm for a while. I know the macro was a bit better over this last week, but, um, I think that is a hard thing to expect to kind of stay the same over the coming weeks here. If we've learned anything, even over the past few months of this current administration. So, we operate with longer term focus and still trying to be conservative. I think those warning signs are still very apparent within the overall macro here. And on our side, again, I've remarked before, we have two, roughly $1 million deals that we're trying to exit. One has been under contract. The buyers have had a meeting with the county, their development team. They're aware of everything going on within the macro. They think it's still going to be a solid exit on their end for when they actually develop out the project. So far, zero red flags. Hopefully can close even sooner than the current early August close date. We're really holding our breath for that one to work out. They have another meeting in roughly 2 weeks here. Hopefully not that many more county meetings before we really get some clarity on likelihood to close. And then our Louisiana big deal, even market updates there. There was, properties, or at least one larger property, 400K cash purchase price after the trade war started, closing quick, like 55K per acre, and worse quality terrain than the properties that we have. So it's a very good sign. We're planning on listing our larger acreage of 3-child parcels at roughly 40K per acre. They're slightly larger than the 7 acres that was the recent comp. But we're still feeling favorable there. We're already having clearing work starting this coming Monday. That's going to take a couple weeks, and then the driveway and so forth will probably take another couple weeks after that. So we'll be listed by late May. And again, from the macro side, again, who knows what's going on with these tariff situations? Supposedly, oh yeah, trade deals over the next few weeks. Who knows? But to me, I'm looking at that ticking time bomb again of the that 90-day delay of the reciprocal tariffs that are going to come back into effect in early to mid July. So again, I'm trying to offload a lot by then because who knows what can happen then, and market shifts and so forth. So that's kind of our strategy on that one. We did have another property that we listed in South Carolina that was getting a lot of early hits. It was actually a 2-property portfolio deal. It took us like 9 months to close. There's so many complications involved with it. The property that I thought was going to be harder to sell has actually had more activity, and we just got an offer on it at just under list price. So we bought these 2 properties for roughly 125K all in, do all this survey work and stuff, perk tests and so forth. And we listed the larger property for just 150, and we got a cash offer for 125. A bunch of contingencies, but closing relatively fast, mid-June. So we countered back to 145K because it has a lot of activity. Have another possible buyer visiting today, and removed a whole bunch of those contingencies. We'll see if the buyer, who's also an agent, so they're a savvier buyer, is going to accept. But we'd be feeling pretty good about that one. Even if we had to take the 125, I'd be feeling really solid because that's basically a break even on our total principal for that 2-parcel deal. And then the other one, is currently listed at 95K. I'd estimate it probably is going to go for closer to like 70, maybe 75. All of a sudden that's gravy profit. And that one's still getting a lot of activity as well too, but not quite as much as this one that we got an offer on. So I'm feeling a lot better about that. We had this double close situation that was going to be, it was going to be an equity double close. Like you couldn't do a transactional deal, but it was going to be like a buy at 26K, sell for 65. We had already lined up a buyer. This was in um, South Carolina again. Yeah, South Carolina. But turns out there was title issues. Now a seller wants to back out. I put that as lower likelihood, but it was still showing that the market was moving on that side. We have another Alabama deal that is another development project that went under contract very quickly. So that one's still solid for end of May. And then, we have a few or, two other properties specifically that I'm just not feeling that good about. Again, in this current market, I would not have funded them. So I'm just trying to offload ASAP. One we bought months ago during kind of a slower period. It was a coin flip. Excuse me. We're keeping that in, not editing that piece out. A lot of these Austin springtime allergies creeping up. It was a Tennessee property that we bought for like 35-ish K. Had some extra protections on from a preference side and listed initially at 70. We got a cash offer that was supposed to close very quickly at 50K, and then the neighbor just came up. Yeah, sometimes you just never know what type of info or motivation some of these neighbors have, but they met the potential buyer out when they were doing a site visit, said, yeah, this property doesn't perk or whatever, you can't build on it, which is just not true. We have the documentation that proves that false, but it scared off the buyer, and now we're just been cutting price. I'm not like basically fire sailing this. 2.5K drops weekly at this point. It's been on for like 4 months. I need it to move. Hasn't had much hit. So it's at like 45K. It's going to be basically a break even, maybe a small loss, possibly. But I just need this one off the books. I need to recycle this capital, get it off. And then we have this 25 acres that's split into 3 properties in Tennessee as well, that we still have a lot of margin on, but I've also been cutting. It was another property where I probably flip-flopped like 20 times on whether to fund it or not. I thought it was going to be more of a base hit. We had a lot of protections built in because I thought it was just a chancy property, some inferior characteristics, lower market, but I thought we had enough margin baked in. And now I'm like, yeah, especially when the market's tighter on a macro level, I just want to get this one off the books as well, trying to do neighbor letters and just move this one, a lot of routine cuts too. So, and that just kind of gives you an example as well, like as, well researched and, how analytical our firm is as well. Like, again, land is a risky business. There's a reason the margins are oftentimes so solid because, you inherently have to take a risk on a non-cash flowing luxury asset and have confidence in your underwriting. And like, sometimes it is going to be a bit more of a coin flip. And so you have to take a calculated risk on which ones are going to move and be willing to understand, okay, am I okay expecting this one to be a base hit versus, a double or triple or whatever, and allocate funds that way. So this is one, when we were like flowing so much cash flow and, routinely selling properties through much of Q4 and early Q1 of this year, that it made a worthwhile, it was like a worthwhile bet at the time to pursue. But now, like post trade wars, like I would not have touched this property, so I want to get off the books. So that's just an update on our total portfolio. We're also looking at a couple. We actually just closed on a property. I mean, it was like a minimal, like 20K purchase. But I checked in with the broker and like, okay, they're really still flowing properties. We're going to list it at 60K, and think it has a high likelihood of closing soon from a sell side perspective. So, we are still working on acquisitions here, but noticeably it has slowed down on our side. We had like all-time highs of deal flow coming in pre-trade war from like much Q1 of this year, and now it's pretty considerably slow. There's actually been a higher percentage of very large deals, like 500K plus, which I'm trying to push off to like Q4 of this year as the macro sorts itself out. We get some of these larger exits taken care of to recapitalize here, not overlever ourselves. So that's intriguing anyway, because that's where I'd like to take this business to larger operators, less volatile clients. I mean, again, just land industry as a whole, like it's there's a lot of faces changing routinely here. So volatile clients lead to a volatile business, which I'm trying to clean up over time. But some of these smaller deals, like some are still coming in, but I have the sense, and as I've been writing about this and presenting an opinion, other people have come out and saying, some have been saying, hey, like I'm still selling a lot, and I just shared with our portfolio, like half of it has done like very well, and half is like I'm not feeling as good about it at the moment. So we're kind of split in between there. I'd say, if the macro wasn't so volatile, I wouldn't be as concerned. But because of it, like I'm treating our portfolio as a step, a notch below where I would like it to be. Just future orienting myself within our business. But some very solid operators have reached out and they're like, "Hey, I'm still moving a lot of land. Anything below like $250,000 purchase price or sales price rather, like it's still moving." Um, Others, who I would say are the majority, are saying acquisitions in dispo has slowed down. Agents are indicating, hey, some buyers are just, they're on the sidelines for the time being here. Sellers are just letting their listings expire. A slowdown in the market overall. And then, some brokers are also saying, hey, like this has been the most business we've been seeing in a few years. So, real estate always is a very local business. You can't have, a blanket opinion. You have to do your work in each area that you operate in. And that's what gives us, so much inside info, is the fact that we operate nationally and have to take into account so many different data points. My sense, though, is that more people are struggling than are really like thriving in this environment. Mainly because if people are thriving, like it's you want to like mention it publicly, it's all looking good. But when things aren't the best, like a lot of people are just being kind of quiet and not necessarily sharing that it's been more of a struggle. So that is my sense there. And it's, we just look at our own business where, we think we have, one of the most robust dispo systems. Plus we, market like crazy and had, all-time highs of acquisitions coming in recently. And like the fact that it slowed down on both sides to me is pretty telling, since our data is, we have so many data points to work with that even if I don't have like full insight into every land investor's business, my sense is still like, hey, people are not doing as well at the moment as you might glean just by looking at what people are mentioning and so forth. Because again, if you're struggling, you're usually not going to be mentioning things publicly. I could be wrong, but that is my sense at the moment. And, I'm not mentioning any names. I'm just, people have mentioned things to me privately and so forth. So I'm conveying certain sentiments as well here. So that is kind of where things stand at the moment. And even like, there's another land investor, typically does like a lot of debt deals, reached out to us for equity funding here too, which like also tells me the capital markets are even tighter than they may usually be. So, that's another telling sign, like, things are just tighter, both on a cash conversion perspective, cost of capital, just availability of capital. You really got to be careful. Really got to be careful in a market like this. So that is the going theme at the moment. Let me think if I'm forgetting. Am I forgetting anything else that is noteworthy? No, I don't think so. I'll try to again, like weekly basis, do some market update related, because again, a lot of stuff is just changing, even on a day by day perspective. We have our ears to the ground, and I really value any other land investors who are, sharing their experiences currently. That helps us a lot to understand more as well, and so we can all work together to evolve and thrive and get through more difficult markets as well. So I'd say this week I'm feeling a bit better overall about the markets compared to the last 2 to 3 weeks, but just slightly more, still very, very conservative at the moment. I will let you know if and when that changes. With that, seriousland.capital. Again, we are still open for business. I realized, hey, maybe my acquisitions have started, or like deal flow has stopped because people see like being more cautious about deals and so forth. But like we've developed a reputation for no BS. I'm going to tell you guys the truth, the way we see things going on within the market. So like I'm not going to present a false picture. We're just like, oh yeah, this is like best time ever to be investing in land, and keep sending more deals and so forth. Like that is not the realistic viewpoint. Again, we are still open for business. I literally just funded a deal yesterday. It's just we're being more cautious. So, if you think you got a good deal, send it over. We'll take a look at it. We're, still going to be funding deals, but again, I'm not going to BS you guys with, presenting false opinions just for the sake of, vanity metrics within my own business. Like that's just not how we operate. We've, built a high integrity operation here. And then Land Daily Diligence Facebook group for your zero cost reviews of your land deals. And then landpricer.ai for the most accurate and simple way to price land. More and more work coming, this automated process. I'm so glad I brought my CTO on for this because it's just forcing me to think past blockers of what I think is possible technologically, and just realizing, oh wait, yeah, this is actually going to be possible to automate this further. Why not push this as far as possible? So more updates to come on that end. With that, subscribe and share if you haven't already. See you tomorrow. Bye.